All right. Well, good afternoon, everyone, or good morning, wherever you may be. Welcome once again to the KoreSummit webinar series, Blockchain. All there is about blockchain. Today we got two special guests that are going to have some fun with us in this discussion today. But before we get started, we do want to thank our sponsors, Nuvei, publicly traded company on NASDAQ, who is one of the largest payment processors around the globe, and more importantly, supporting the private capital markets with their innovative technology. So thank you to Nuvei, and of course, KoreChain, the blockchain provider for the private capital markets. So today we have two great guests that I'm not sure if they met before, but boy, we are going to have fun, Kiran. It's going to be a great, like always, right? We always have fun at these at the events. So today we're going to be talking about tokenization of real world assets. One of our guests here it's a very dear topic to him, and I've had a lot of years working with him, and it's so great coming full circle. You might have heard last week I indicated that he would be joining us today, and we're very excited as well to bring one of our other partners here as well. So let's start with the introductions first. Ladies first. Sara.
Yeah, I'm Sara Judd. I'm Chief Operating Officer of North Capital. And North Capital, we are a registered broker-dealer and technology provider, and we're really providing the end-to-end infrastructure from a regulatory perspective to support capital raising. So escrow facilitation, custody, vetting the investors, and secondary trading are really like the key components of how we support issuers through the life cycle of a private security.
Great to have you here. And Mr. Louis Cohen.
Well, thank you so much, Oscar. It's great to be with you all, and a real pleasure to be talking to you. My name is Louis Cohen. I'm a co-founder of a U.S. law firm called DLX Law, and the focus of our firm is on clients working in the blockchain tokenization space and all of its various aspects. And I'm a career law and securities lawyer, worked before the SEC on many different projects, and also in the private securities markets as well. So great to be here. Thank you.
Great. And, do you want to do a little short intro, Kiran? Tell everybody you're there, who you are.
I'm here, Kiran Garimella, Chief Scientist and CTO for KoreConnex and KoreChain. And I've been in this capital markets space for many years in finance industry. And though I come mainly from an IT background, so technology is my thing, and nothing can be more exciting than tokenization.
Well, great. So there you go. He put it right there, tokenization. So we're going to talk about tokenization of real world assets. But not only that, we're going to get started. Obviously, got to love an industry that continuously keeps innovating with acronyms. And I did get an email. You're not going to believe this. When an invitation went out, we tested something. Tokenization, RWA. And people were saying, what is RWA? And then you said real world asset. And what do you mean? So, Louis, let's start with you. I mean, I know this is a real topic for you. Give us just an overview. What are real world assets before we jump into the tokenization?
It's a great question, Oscar. And in fact, it can be a little bit confusing. What's an unreal asset, but really that distinction is trying to clarify there are projects in which everything is sort of an ephemeral blockchain asset. So for example, tokenizing other tokens, for example, people wouldn't consider that a real world asset because, of course, everything in some way or another is in the real world. But really what we mean are either financial assets or physical assets that exist independently of any particular blockchain or network. So there could be things like stock in a company, for example, a debt instrument, those are financial assets, or they could be things like tangible assets. I'm going to tokenize gold or other commodities or other things. So real world assets is generally understood as a broad term that encompasses traditional financial assets as well as traditional physical or real assets or real world assets.
The first one, I know everybody's going to be thinking, okay, so you got a token here, it becomes an asset. Okay, all right, and excuse me, everyone. And I think that's the reason why we're having this discussion today, is because it can be confusing for everyone understanding what a real world asset is, especially if you grew up in the world that this phone is an asset, it's physical, I can touch it. It's hard for them to believe sometimes that something that you cannot touch or feel is an asset, but in essence, it is under the rules and regulations we work under. So let's slip a little bit into the tokenization side, and then we're going to go into the regulatory side, which is Sara, because she's, being a broker dealer, she's going to tell us her view. But Kiran, tell us tokenization. So he's talked about the real world asset part. Let's talk about tokenization. Bring those two together so the audience, and then we can slip into our conversation on where this is really going.
Oh, certainly. I mean, in the past, before we had technology, the whole concept of tokenization was captured by the word securitization. So you actually take a whole bunch of assets, right? Whether it's physical assets like Louis was mentioning, or intangibles like goodwill and inventories and stuff like that, or financial instruments, lending instruments and loans and debentures and all this stuff. And you're basically putting all of that into one big bucket, and then you're then issuing pieces of that, and you call that ways of securitization, right? And of course, that happens in paper-based securities. It's been there for a very, very long time. In fact, I started doing paper securities trading way back, and I still have one of those old paper shares, right? Now, the digitization of all of that has this whole digital technology was started where they started tokenizing, so to speak, the traditional securities. And several countries went to that. They said, hey, instead of paper-based shares and share certificates, we'll issue electronic records for you. And India, for example, went through a whole process of what they call dematerialization. I know that sounds kind of weird, but now people had to have demat accounts, so they had to turn in all their physical certificates and then get demat, digital assets, right? Now, the interesting part about all this is that because of the way the technology works, people thought, wait a minute, instead of looking at the standard securities that are from traditional finance, why can't we extend that to so many other assets, real world assets, right? Because if you go the traditional finance route and the traditional banking route, it takes a lot of time to create an asset of a certain type with characteristics and the whole infrastructure behind it. So blockchain and this entire new technology is offering a much faster route, because now people can go in there and use several platforms and say, wait a minute, I'm going to take all these little assets and keep them aside and then issue securities against them, or some form of representation of it in a fractional form, and there you have it. I mean, that's a whole bunch of tokens that you can issue against it. So hopefully that made a lot of sense, because the idea is not new. It's always been there, but the using computer technology, especially blockchain, in a wide ecosystem today, just expanded the scope of what you can do with tokenization.
Okay, I appreciate that, and you are right, but I think we always have to keep reminding ourselves that I think Louis is perfect example, and Sara, all of us here, we all understand that we may know it, but we need to continuously start at the beginning, because quite often, when people are coming into a market thinking it's this, when you need to walk them backwards, because it's those little steps here that may get them into a situation where they don't understand why this is needed. So that was a great explanation. So Sara, miscompliance. So from a compliance perspective, we got tokenization, real world assets. Mm-hmm. So obviously you see it all. Give us your perspective in what does it mean from a broker-dealer perspective, these two items?
Yeah. Well, first start by saying that really what's happening in the alternative space is the fractionalization of assets. And that's irrespective of any digital token or tokenization. That's really, you look at the collectible space, artwork, real estate. Investors and the private market space has grown tremendously. And so then you go, well, why does blockchain matter? And why does the tokenization of these assets matter? And that's because there's no common infrastructure in private markets. So private markets has grown, I think, more than tripled in size over 7 years. But there's not a common infrastructure like we see in public markets that allows paths to liquidity, that allows transparency about the asset. And so really what's exciting about blockchain is the potential to create a common infrastructure to make private markets more efficient and frankly act and behave a lot more like public markets. From a investor perspective, just to kind of start touching on the compliance piece, and people may disagree with me, but does a tokenized asset have more value because it's tokenized? And if I'm an investor, I would say no. I have to look at what the underlying investment is and whether or not it's tokenized. Is it a good investment for me? Does the risk profile align? And unfortunately, at the start of this new technology, there were a lot of bad actors in the space, really promoting. So a lot of investors got burned. And as such, that brought a lot of regulatory scrutiny to anything that says there's blockchain utilized, it is tokenized. I think we're starting to move through it and get on the other side. I think that there's starting to be a little bit more, I'll say a little more warmth from the regulators to be open to this technology being leveraged purely as they say, like as a redundancy to the traditional methods that are defined in the rules. So it's kind of the long game here that we're playing, is building this common infrastructure to be able to make this space more accessible, liquid, and transparent, which the goal then is, by doing so, we're creating better outcomes for investors.
Can I ask a quick question from Sarah, just to kind of get your opinion on this one? So one thing you mentioned, which is very interesting, is that just tokenizing something doesn't increase the value of the underlying asset, obviously, right? I mean, it's just simply a representation. But in one sense, it does expose the underlying asset to a wider audience in a much more palatable way, much more convenient way, right? So this is somewhat, I mean, I think of this as very analogous to taking a spin-off. You have a subsidiary that's kind of hiding under the main company, and now you spin it off, and now you've exposed it and kind of brought it forward and made it accessible to many more people. So I don't know if you had any thought around, that kind of a value that tokenization provides.
Yeah, I mean, if from an investor perspective, I would look at it more as, what is the intention of the issuer that I'm investing in? So like, if I know that there is let's say artwork that I am investing in, it's been fractionalized and tokenized, that to me as an investor is going to say that this investment has intention of future secondary trading. So they are trying to create paths to liquidity so as an investor, if I don't want to be locked up, I go, okay, this is probably a good signal that, first of all, they're focused on where the technology is going, and their intention is to allow a path to liquidity. But really, that transparency piece and getting it to a wider audience helps for liquidity, but also helps the issuer potentially raise more capital. But as an investor, I'm still just, what that underlying asset is still, if it goes up or down, that's what happens to my money, irrespective of the technology that represents that.
Yeah, just quickly weigh in, Oscar, on that.
I was gonna bring you in, yeah, because you have a really interesting perspective regarding the asset and what are real world assets that are deemed as security, right? So this leads into it perfectly, please.
Well, it definitely. I'm certain Oscar will be talking about that in a moment, but I just wanted to quickly comment on the value point that Sarah and Kiran have said, which I kind of agree with both of you guys. So, Sarah, your point is merely tokenizing something doesn't change its fundamental and underlying economic value. That is what it is. And I think we'd all agree. Kiran, you made a somewhat different point, which I also kind of agree with. I would just want to harmonize the two, which is that aggregated economic value is what it is, but people attach a discount or premium to liquidity associated with an asset. And so, the ability to readily either acquire more or dispose of some of an asset doesn't change its inherent economic value, but it may make it more desirable for you relative to other uses of your capital. So to the extent you're thinking, I can buy a government bond, I could buy a very liquid, top, NASDAQ stock or NYSE stock, a Toronto Exchange stock, whatever, keeping it cross-border here. When I look at that, and then like if I bought a painting, for example, to Sarah's point, it wouldn't be very liquid at all. And if I did want to sell it, let's just say it's my daughter's getting married. It's a wonderful event, but honey, we need a lot of money to pay for this wedding. Well, there's that darn painting you bought. Well, I don't know, it could take me months to find a buyer. If you have a liquid market, I might be able to raise capital on that much, much more quickly and attribute some value to it. So I'd agree with both you guys. That's the short of it.
We're in agreement then.
Too, but I just wanted to comment on the relationship of tokenization and value.
It's almost like giving a. Yeah. Sorry, I was going to say.
No, go on. Correct.
It's a giving a legitimacy to something, right? So years ago I used to trade the futures market, and whenever people created a futures contract on the new market, it's all standardized. It is coming of age for that particular underlying commodity, right? And because it's now getting widely recognized, and therefore that's the reason why you have, the futures contract on it. I mean, tokenization, I kind of view in the same light too. I mean, why would you tokenize or anybody go through the trouble of tokenizing something, a real world asset, if there's not enough of it and there's not enough value in it anyway to begin with?
It is an interesting discussion that even to this day we're still trying to deem what is value. It just means that I was already leaping ahead, but the reason we got here is that we're still trying to get through that, and it is interesting that we are having to reassess what is value. And obviously it's an interesting discussion, Kareem, that we'll probably need to bring a huge bunch of lawyers and academics in here to teach us what. No, but because I am serious, because it that's the foundation for all of this, right? And if it's still in not so much discussion, but in a bit of, hey, is it yes or no, and then we move forward, you can imagine how the rest of the market must feel when they're going through this. So I think this is exciting. The three of you here opened up, and I'm listening, and this is one of the greatest things about the industry. We need to be listening to those shortfall items that are existing, because it becomes becomes a hard stop because you didn't acquaint for this, that, hey, wait a minute, people don't see a value in this. You really need to describe what that is in a different way so people will know what it is, because there are professionals out there that no, a token is nothing. It's air. Well, we all know.
Well, I mean, that's sort of been the historical thing, right? I mean, that's why, Sarah, you hit the nail on the head when you talked about the value portion, right? And sometimes I have fun with some of my audiences when I'm on a speaking engagement. I say, hey, somebody tell me what's the value of Bitcoin right now? And out goes all the, mobile phones, and it's saying, Bitcoin right now is $47,000 or whatever else. And said, no, that's the wrong answer. You told me the price of Bitcoin, not the value of Bitcoin. There's a big difference, economically speaking, in the two, right? So, I mean, a lot of the early tokens had no real world asset representation, and they're just a bunch of electronics kind of running around. And that's why people, I think, continue to get confused about what it all means. And that's the reason why the value discussion is so critical.
Well, and I think something worth noting is, when you look historically at private markets and private assets, so real estate, I mean, even think when we're talking about real world assets, how many sectors that crosses, from private securities to real estate, collectible, I mean, anything, right, that you might want to invest in. If you look historically at the market, what was prohibitive, right? Like why would it be difficult to invest? It's always considered, high risk, high reward, but what kind of gives it that profile? And that is typically very high investment minimums. So if you're wanting to invest in a hedge fund, or if you're wanting to invest in artwork, you're collecting the entire piece. Maybe you're creating an LLC or a specialized vehicle to be able to invest, but that minimum is really high and prohibitive. And what fractionalization allows is now I can build a portfolio. I can have a smaller allocation. I can diversify my risk. So that's kind of one piece that tokenization supports, is creating smaller minimums, smaller barriers for a more diversified portfolio. The second piece of that is liquidity. And I want to really highlight something because I think this is important. A path to liquidity is not the same as liquidity. There has to be demand for the asset in order for there to be a market. So just because someone says, hey, you can trade this asset, doesn't mean there's investors on the other side that want to purchase those shares. But prior to, this evolution we've experienced over the last few years, there was not even a venue or pathway to do that. There was not even a pathway to liquidity. And that's what we're seeing. And the markets are starting to be built, where I still think we're in the early days. But those two barriers being mitigated is really, I think, the missing piece, and what has limited the ability for more mass adoption or mass, investment in these various asset classes.
Yeah, it's like what the mathematicians say: tokenization is a necessary but not sufficient condition for liquidity.
Right. Exactly.
You're well said. I would quickly add to that liquidity. Sorry, can I just one quick thought on liquidity to add, which is I absolutely agree, Sara and Kiran, with both of your observations. I just add this gloss, which is for there are a number of things that need to be present for you to start achieving liquidity, including the underlying infrastructure that allows relatively quick trading. But the point that I think, to my mind, as a lawyer, gets overlooked is that both the buyer and the seller need to be reasonably confident that they have access to all relevant information to make a pricing decision. And the analogy I often give to our clients is for those who have been lucky or unlucky to buy a personal home for themselves. They know you spend a tremendous amount of time. You look around, there's that yellow one, there was that other one over on the street by the hill, and they're all different from each other. And it takes a very long time. There's no liquidity, because what that value is, you could say, well, this other home sold for about that much, but this home's different, right? And there's the different circumstances with the seller, many different things that create a friction that prevents the buyer and the seller from really comparing. When you fractionalize something, you may, but not necessarily, may be able to create a more common or fungible market, but it still depends on people having access to all the information. I think, Sara, one of the reasons collectibles have been popular is because there's really a limited amount of information. You have a Warhol painting, there's just really not a lot of additional information you need about that painting. When you have more bespoke assets, equity in companies or a particular parcel of real estate, there's more underlying information. So even if you're buying a fractionalized piece, in fairness, to figure out what the value is today versus yesterday, a week, or a month ago, you need access to that information and to digest it. And that could be a bigger friction. So I think we just need to, as tokenizers, right, we need to take that into account.
It is interesting, all the different pieces that quite often get lost in the flash of the moment when people are getting all excited about a topic. And then as we unravel it, look at us. I mean, we spent the last 20 minutes just talking about what a real world asset is, what is considered an asset, and what are the value. I mean, tokenization is there. You're right. This is just an evolution of using this form of technology to bring it in. But we still have some areas that we still need to open up. And I think that's the exciting thing for everyone, as all of you are going through the discussion, is that we're seeing that there is a trend now. It's all about RWA, and like everything, we see this quite often. We've seen it with other acronyms. I think this one is real, and more importantly, why it's real, because the industry, as Louis, you said, it's come around. It's understood that these are securities. So let's talk a little bit about that, because, we talk about tokenization, we talk about real world assets, but they're securities. So because they're securities, the fundamental way, the approach that's been taken is a little bit different. But let's back up a little bit. What makes it a security? I know you've written extensively on this, Louis. So let's start with that. and then let's move into the actual elements of it. But please start.
Well, thank you, Oscar. Well, I'm very mindful. People joke with me, Louis, it's easy once you get on this topic to find the start button, get me to start talking, harder to find the stop button, get me to stop talking. So I'll try and keep it pretty succinct, but happy to address questions Oscar, you, Sara, or Kiran have and get into greater detail. As a US lawyer versus a Canadian or European lawyer, or what have you, I'm going to speak to broadly US law. And those principles apply generally in many other jurisdictions. I will note Europe does have some important differences, so don't extrapolate from this to European law. Broadly speaking, the way securities are defined in the United States is that there's a pretty long laundry list definition that includes stocks, bonds, participations of interest, and most of the types of financial instruments that most people will know or be familiar with as securities and are largely, not exclusively, but largely not in dispute. There is an important lead-in which says, unless the circumstances otherwise require, and that was the subject of an interesting, very high-profile lawsuit in the United States that recently wrapped up around bank loans and when bank loans are securities or not. And it just goes to show it was litigated all the way up to our Second Circuit with questions about, well, is this a security or not? So, reasonable people can differ about these things. The area probably that is most relevant in the discussion of tokenization is the concept that we have in US law of an investment contract. And that was a catch-all phrase that was added to the securities laws that didn't have a clearly prescribed meaning. Our statute itself doesn't further define that term. And so courts struggled a bit with, what's an investment contract? Ultimately, our Supreme Court came up with a pretty punchy definition in a case involving a company that was financing orange groves. It was the W.J. Howie and Company. And they were accused by the SEC of selling unregistered securities, and the Supreme Court agreed with the SEC. And they came up with a definition, and that is, is there an investment of money in a common enterprise with a reasonable expectation of profit, primarily from the efforts of others. It was originally solely, but that sort of got moved away. Let's not dwell on that. When those four features are present in a given contract, transaction, or scheme, then that contract, transaction, or scheme will be treated as a security. In the US, as a general matter, you can have an investment contract scheme based on some asset, for example, a parcel of orange groves. There are cases involving whiskey and animals being grown for pelts and many, many other things, that the underlying thing is not itself a security, but the scheme around it. Someone says, hey, how about you give me some money? I'll give you whiskey, animals, whatever, and I'll make sure it all goes well, and Bob's your uncle, we'll both make a lot of money. That scheme is the security, not the underlying thing. When you fractionalize anything, and the SEC in the US has thought about this for quite a long time, long before tokenization arose, particularly in the context of real estate. So if you take a single parcel of real estate and you break it up into little pieces, whether or not you call them shares in a company or just a tenancy in common, which is a type of real estate interest, the SEC has generally said, if you do not have a consumptive interest in the real estate, and timeshares would be the perfect example of things that get a little complicated, and there are complications. But holding aside some of those edge cases, generally, if you're not either yourself planning on living in the home or renting out the space, if it's office space or what have you, if you're not planning to do that or somebody else isn't, then probably that fractional interest is considered a security. And that would apply whether we're talking about, to your point, Oscar, paintings. So, a single painting, not at all a security. A fractionalized piece of a painting, almost certainly a security. So most tokenization, really working our way back, does involve securities. That's about as short as I'm going to do. But Sara, please,
no.
Feel free to add or disagree.
I'm just curious about something. I mean, this is a great explanation, obviously. But this question I'm kind of directing to Sara from a compliance and due diligence perspective. When companies are trying to create tokenization or tokenized securities against real world assets, what are some challenges that you're seeing from a compliance perspective to say, yep, that's a valid security, yep, that's good, or hey, here are some red flags you need to watch out for? Just kind of wanted kind of your color commentary on that one.
Yeah, I probably don't have a lot of great feedback to add, because by the time it kind of hits our desk, it's been determined that, you know, the issuer believes it's a security, or their securities counsel or their counsel has told them it has to be treated as a security. So usually by the time it kind of hits our desk, they know what offering exemption that they're going to raise capital from. They kind of have the different players identified. In the early days, I mean, we had a lot of groups come wanting to leverage technology and certain services, but we're trying to make the argument that it wasn't a security. And it really is. It's, you know, what Lewis had outlined, it's the Howey test. And from our perspective, it's, look, if you want to go that route, that's fine. I'm not going to try and convince you otherwise. But we believe if it fits in these, you know, kind of passes that test, we have to treat it as such. So it just changes our ability to work with clients. But I would say, in general, securities attorneys and, you know, corporate attorneys are really much more plugged in now than even 5 years ago. So we just don't see groups trying to skirt around, because candidly, it's just almost more work now. Like, there's a lot of offering exemptions. There's been a lot of updates to the regulations in the US that make it easier than trying to like go around and take the risk of it being determined it was a security later on.
But don't issuers sometimes, you know, I mean, getting it through as a security, that's fine. They have filed the offering, but depending on which regulation it is, there are types of ways of, you know, conveying the message and all. I mean, but that's kind of where, you know, compliance plays a huge role, right? I mean, can you say certain things? Can you not say certain things? Can you solicit in a separate way? I mean, that's a huge ocean I think many issuers might fall into.
For sure. And I think the question you have to ask in today's regulatory environment is, what does the benefit of how you want to market the security outweigh the regulatory scrutiny you may attract? And so to be able to say, hey, you know, there's a difference between saying we're at the, you know, forefront of new and advanced technologies. We're leveraging blockchain to make it easier for you as an investor to have a better experience, more options for liquidity. I mean, that's, as an investor, that's compelling. And I'm not saying, hey, this is worth more, it's tokenized, you know, invest. So that's going to probably go over better than a lot of the messaging we've seen in the past. So usually that's what we're looking at, is how it's being conveyed to investors, how that point is being articulated. It's funny though, now, like, especially with like Reg A Plus is an example that goes through an SEC review. It almost gets buried in the document. Like, we're leveraging a transfer agent who has this technology. So they're acknowledging it, but they're not like raising it. So it's funny that actually what I've seen over the last few years is companies want to embrace this technology because the benefits really are better for their investors, better for them, lower costs for them trying to manage on a long-term basis their cap table. So now, but they don't want to, you know, create undue, you know, trouble with the regulators or extra scrutiny. So they go, hey, by the way, it's tokenized, you know, like in the document. And so that's actually interesting.
No, it's funny you were saying that. I was thinking back about company. You're right. We're not seeing companies coming at us with these wild goose ideas. And if they do, we simply ask two questions and we go, you know, we're not your vendor. We're just not. But no, we're not your vendor. If you're not working with any of these lawyers and you don't know the regulations, it's an uphill battle in that area. And to your second point, you know, we often get criticized. Hey, guys, how come you guys aren't telling everybody you're tokenizing? But it's not for us to say. I mean, you don't see the banks telling everybody, hey, we're storing your money on IBM, DB2, or Oracle.
Exactly.
Who cares? It's, but does it help? Does it help us all manage information? 100%. There is no, you know, Lewis said it. I mean, art, fractionalization of art. And that multiple owners, and North Capital is right in the middle of this. You may not realize this, Lewis, but North Capital is the leading secondary ATS in these new marketplaces for Regulation A, which is a most unbelievable regulation for this kind of structure, for allowing people to buy a token, because it's let's say a fully regulated token, which is a fractional ownership of a piece of art, and then to be able to trade it in the same environment, fully compliant. So the technology, the regulation, and guess what? North Capital didn't ask for any special exemption. Neither did the issuer. None of that. So what does it do? It removes all the. So what's it really about? People want a piece of that art. And now we're doing it for carbon credits, real estate, films, music. It's anything. So the idea of when we often hear that it cannot be done unless it's in this environment, in the publics and all that chains, I disagree with that. I believe that it can be done. North, you're currently doing it for Masterworks, which is fractionalizing art. Rally, we were doing shoes. That one was a hard one. Shoes was tough. Not fractionalizing.
Was it the price point? Was it the price point?
The price point. It's just the price point. Because if you're using Reg A, you got up to 75 million. That's a lot of shoes you got to put in there. But art, it's easier. Films and all that. So the reality for everybody here, can you tokenize real world assets, real estate, cars, films, all of these items? Can you have an environment where you can buy, can you sell, and can you do it fully compliantly in a way that's cost efficient without changing any regulators' rules? The answer is 100% yes, and be on blockchain, because that's what we've done. And 100%. That's exciting, so the door's open. And by the way, lawyers charge you more for it. Now you need to figure out the model for this marketplace you're going to create. We have a lot of people that come to us and say, hey, I want to create a marketplace. The first question we ask is, do you have a lot of inventory? Yep. Because if you don't, Sarah and I have been there, when you run out of shoes, exactly. Nobody comes anymore. You need inventory. So you have to be an entrepreneur who is part of this world, not just seeing the opportunity of the world come to fruition. So the reason we put the subject in here at this time is because it's real. So this is not a non-real. And Louis and I want everybody to know, because I love the fact that you and I have come full around in 10 years. Seriously, I mean, we went like this. I'm not kidding you, Sarah. Louis was our first lawyer we were working with, and we saw the world differently, and that was okay. There was nothing wrong with it. I respected his view on tokenization, and there was a strive that this could eventually do it. But clearly, after all these years, it's not going to happen. And you can correct if I misquoted you, but
I would put it a little differently, but I'll let you finish your thought. Yes.
My only comment was going to say is that the public chains and all that are listening to this or participating in these things, it doesn't mean that we can't work together. It just means that this vertical, when we're talking about real world asset, and it becomes a security under U.S. law. So I'm going to put that caveat in there as well to make sure it's clear. And why that's clear, because we know everybody eventually wants to come here because that's where the money is. Then you need to do it this way, and it can be done. And that's where you and I were leading on to that. This is the reality of where we are in the market in the United States. Sorry, go on, Louis.
No, all good. And I agree with that. I would just, my only nuance is, I think, technology, and I'm sure, Kiran, you could talk to this in much more detail than I, it's a very broad thing, right? There's not one thing. And I think what CoreConnects have done, and North Capital, how you guys have implemented this together with issuers, is an amazing and remarkable use of that technology. This is not to say that there aren't other uses, right? So that's, I think, really the point. Mm-hmm. And I absolutely do believe, just personally, and I see some of my friends are in the audience, which, hello, friends. But there are important uses for open permissionless blockchains. And there's no change on that at all. But that does not take away, I think, we have so much tribalism if I may expand for a moment, not only in our technology, but really in our politics and everything else, we need to get away from that. Look, because those are two different things. They can live on their own little channels here and there, and we don't have to denigrate one to the other. So I think the purpose here, Oscar, which I strongly support, is there are incredibly interesting opportunities to work with KoreConnex and with systems of this type, with broker dealers like North Capital, who I don't know if Sarah, we go back with North Capital a long way ourselves. We're blessed to have had a long relationship with your firm. So I think the purpose for those in the audience is to have an open mind and think, hey, how do we use these technologies to do really interesting, exciting things, solve real world problems, which I know, Oscar, you've always been laser focused on, and drive value. And I think if you're doing that, that's all that really matters. That's my answer to your
I would just add
Sorry, Sarah, please. No.
Go ahead, Sarah.
I was just going to quickly say, I think, Louis, you're exactly right. And Oscar, you hit on this too, in giving the analogy of a bank. But there really is with the use of the technology, the question is, what problem are we trying to solve? And I usually give the example of internet. Like, as a consumer, I don't really care if it's cable or if it's fiber. I just care how I'm getting the fastest internet speed, right? Like, I don't need to know the ins and outs of the technology that's delivering, that internet speed. I just want, as a consumer, the faster speed. And I think similarly with tokenization, I mean, look, on PPEX, on our ETS, the clients that we're working with are doing same day settlement, but they're not using tokenization because they built their own system. Now, the question with that is, that's great for them and their users and their investors. But now if you want to take it to another ATS or expand to other markets, you're asking every vendor to adopt to your specific technology solution. And so when we say, what is the issue that makes it more difficult? It is, we don't have a common infrastructure. Every single efficiency that's created is specific to that company, to their tech stack, requires, so it's kind of creating this open source framework that allows, more portability from all the various, TA, broker dealer, investor, fund administrator, ATS, custodian, so I think that's when we say what's exciting to me, it's wow, the possibilities of the problems that we can solve.
Absolutely.
There's a super strong support on that, Sarah. There's common infrastructure. Very well said.
No, absolutely. I was just going to throw a little bit of a historical anecdote. So back in a few years ago, I think it's like 2018 or 19, Oscar and I, we were at the Hyperledger conference in Basel, Switzerland. And that was the venue when Brian Bellendorf, who is the director of the forum, he said, up till now, we always used to think it's either Ethereum or it's Hyperledger. It's either permissionless or it is permissioned, right? But now with the Enterprise Ethereum Alliance, both parties are coming together. They're kind of recognizing that there is a synergy between the two. And I like to think of, the whole Bitcoin Ethereum folks, they've done some fantastic engineering, no doubt about it. So that's kind of where it's a crucible for new innovation, new NFTs and new models coming up. But the moment you take that, commodities or things, the assets under there, and now you create securities, now you wander into the securities world, right? No, that's an entirely different ball game. But the two can coexist. There's no doubt about it.
It is starting to happen. I think that the discussions are open. Louis said it best, and that's I think we're hearing it all the way around. We're all starting. We've kept our lanes. Everybody's staying in their lanes, and in the end, everybody wins. And we've been advocating, start with the problem. Thank you, Sarah. That was by solving the problem, we really end up really bringing. Now, this is not to harp on anybody being innovative. I really want to make sure that it's widely understood that I am appreciative of the innovation, the trailblazers out there that push the envelope and all that. That's all great. And I still believe that by having regulations, it's not meant to decrease any of the trailblazing that continues. Nope, not at all. It just means that the trailblazing can continue, but as soon as you want to use that trailblazing element of it in a specific area, you just need to take and bring in the experts in and let you guide that direction so it can be adopted to everyone around. And I think that's I think that's the one message that I, in the back of my mind, what did I want to accomplish today for me? And I would like to hear your final thoughts on this for everyone. Is for me was I wanted people to go back to the basics of tokenization. That was really important. Real world assets. I really hope we answered that for everyone. If anybody's got any other anecdotes or information to add, please do, because I find myself every day providing that information to people. And if you've written a blog, let us know, because we want to share it, because people need to know what it means. Because see, if they know this and they know this, then we can move into the next. And then of course the other element is to make sure they understand how the tokenization, doing it compliantly, means, and then what is deemed to be a security. I think we covered it, but more importantly, we put the caveat: this discussion is for the United States. If you're doing things in other jurisdictions, you would have an expert panel for that jurisdiction. I think this is one of the other things that we try to do here, is that we always put it in the perspective of the audience that we're talking to. And what it does, it keeps everyone safe in that note. So, Sara, let's start with you. I mean, those were my takeaways that I wanted to accomplish from there. Anything you can add to any of those areas would be great.
Yeah, I think I like the added point that you mentioned about innovation, because I think if we even talk about what you're doing with KoreChain and the transfer agent and the efficiencies that have been created, and how you've had to think about how that all connects to all the different intermediaries. I mean, there's a lot of innovation happening, and you have to find that like equilibrium where it can be implemented and leveraged. And so it's funny, because when I speak or have conversations as it relates to tokenization for securities, I can come across as like the Debbie Downer about it, but actually I'm incredibly bullish about it. I'm incredibly excited, but I also recognize there's this natural evolution that has to take place that requires a lot of collaboration, that requires a lot of open disclosure with the regulators, that gives them the opportunity to understand so that they can have the proper buy-in. And so it's the long game, but while I think that there's a little overhype, sometimes, I also recognize it's hype about what's to come, maybe not what is here, but we still have to go through the motions to get there.
That's a great point. We too, sometimes we get coined that we're punted down, but we really aren't. If you guys have heard our last I have been if you hold Bitcoin ETH, I tell them, hold on to it. Great news are coming. See, right. And I don't hold any. I don't, because you're right. I do see it. I think what's going on I know we're taking a little, but going on with Binance, I'm excited. I know Richard. I know Lewis knows Richard. He is one of the most highly respected executives all over the world. What he did at Abu Dhabi is transformative. What he's going to do with Binance is it is going to be the global exchange. And it's something that we're all going to be able to trust, because it's going to be fully compliant. So we do know that key people. So again, look at that interesting aspect that we've said from time to time, technology people were flawed. Some people are better at it, than others, but the world is that just because we bring these things to light doesn't mean we don't believe in them. We wouldn't be in this business if we didn't believe in it. We want to just do it so nobody gets into trouble. So, Lewis, love to hear your thoughts.
I'll give a few thoughts. We do have just a few minutes, Oscar, and I wondered, have we gotten any audience questions? Because also, just as I'll give a couple of closing thoughts, but to the extent we have folks in the audience who do want to ask a question, I think all four of us would love to hear that. Just in terms of my closing thoughts, really, Oscar, you've said it so well. And I think the important distinction, Sara, that you also relied on, there are things where reasonable people can differ. What is a security? What is not a security? There are also things, there's no reasonable difference. We know what is a security, and most tokenization of real world assets, as we've said, does involve securities. Once you do go down that path, you are in a regulated landscape, Oscar, as you say, and it's critical. It's just not a nice to have. It is critical that all parties in that value chain understand what their responsibilities are Are they a broker? Are they a dealer? Are they an issuer? Are they an underwriter? Are they an exchange or an exempt exchange known as an alternative trading system or ATS like you guys? What are your roles? What are your responsibilities? Is someone a clearing agent? Those are all critically important questions. The transfer agent, obviously near and dear to your heart, Oscar. All of these are really important roles. And look, if someone wants to go up to Capitol Hill and start talking to folks about lobbying for change, please feel free. At least in the US, totally fine. But today, for the foreseeable future, those are the rules we got. We have to live with them, and we have to find technology solutions that are aligned with them. And I think too much time can be spent just wishing it were different. It's not different, and it's unlikely to be different anytime soon. And so let's figure out what are the most efficient ways and effective ways of working within, a regulated space, which is what it is, which is what securities are.
It is, and just because it's regulated, again, people will find it. We often get in a situation where people go, okay, so how much is it going to cost us for the smart contract? Very minimal. I mean, it's not 250,000, $500,000, because it's already written in the infrastructure. It's security. The fact that you're going to call it a token is somewhat irrelevant. And two, we already gone through the SEC qualification process, so it's already known, and the TA and all that. But yeah, you did bring up an interesting point. I thank you for reminding me there is a question here, and I'm thinking about this one, and I don't have the answer. So the question is, what if a customer doesn't own the fractionalization, but has rights of use of real world assets? So I'm trying to understand the question. Is that a security? Well, if I take real estate, I use the real estate, I pay rent, and that is not right. I have the art, and I pay to go to the museum and pay for it. You use it. Am I missing something here, Louis?
I too struggled a little bit with the question. I think, a right to use, just sticking, Oscar, with your good example of real estate, there's an owner of any given parcel of real estate. But there could be people who have rights to use that real estate. We call it a lease. They're a lessee. The lessee has the right. They don't own the real estate, but they have the right to use the real estate. If the lessee wanted to tokenize or fractionalize their leasehold interest, that would itself be a security. So there are sometimes really long-term leases that do have value. Wow, you can be in that space for 20 years at $40 a square foot. That's incredibly valuable, and you could sublease it and make a lot of money. Hey, I want to fractionalize that. Feel free, probably a security.
It is. Real estate does it already with dividends and revenue shares.
Yep.
So
Exactly.
Hopefully there's another question regarding ATS, especially those serving retail investors should require that adequate information be available for the secondary market investors. So Sara and I have very similar views on this because, but I'll let you start, Sara, and then I'll continue. So let's answer that question about secondary market, retail investors' access to information in ATSs, the realities versus the myth.
Yeah, and the answer is yes. There should be information, whether it's direct to retail or through intermediaries, like other broker dealers. And usually what if it's lesser known securities, which is a lot of what we see trading versus, let's say, pre-IPO, where there's some publicly available information, at the very minimum, you want the original offering documentation, the original offering information. That's kind of the base level to be able to at least make sure someone's coming in with that same information. And then any developments that's reasonable. Sometimes that's easier said than done in these markets, but at the very minimum, usually what we seek is the offering materials from the original sale of securities.
So and here's the reality of what we see. And Sara and I, we've been in many discussions with clients regarding this, is that even though there are many licenses out there for ATSs, we keep talking about it, that trading is occurring. We wanted to demystify that immediately. It's not there yet. The technology, just so you know, technology is there. Blockchain is there. The need by industry entrants to put it there and make it available, it's there. What we are seeing, though, retail investor is trading in marketplaces, these collectibles, Louis, as you indicated, because there's a fluidness in these environments. They're like-minded individuals, but the actual ATSs that are live today, retail investor completely not there. What is there though? Institutional, which is great. I mean, the big players, but the smaller investor is not. And part of that, people go, well, there's a lot of investors investing in Reg A and all that. It makes, but the reluctance is that one that everybody kind of overlooked was, does the company really want that? And that was the major shocker to everyone, that no, they do not. They're either continuing to raise their capital, so they don't want that disrupting their day-to-day. And people go, well, it should be fluid. That's the whole idea of tokenization. Tokenization has nothing to do with the person running a business. They're running a business, they're raising capital to grow it, they need time to do that. And at the same time, there's something we really need to consider that I really thought a lot about it, is, do private investors come in to get in and out like they do in public markets? The answer is no. They come in because they believe in, we're selling the future in certain stages, not the present. There are stages in the present, but it's the future upside that investors are getting into. So I think this is why I get a lot of calls. Hey, what's the status of secondary market trading? Nada. I'm sorry. But it is happening in these marketplaces. So for Linda, the learner that was asking the question, here's an interesting place that it took us many years to figure out this model. Companies like North Capital, ourselves, great lawyers that in particular, people like Sarah Hanks from CrowdCheck, who became innovative in using Reg A with LLC series. And so why is trading there becoming so prevalent and nowhere else? Because the individual is actually not trading outside the asset class as a whole. It's just trading the asset from this painting to the other, moving it around. And it's a phenomenal environment. And I think maybe that's our starting point as we move forward and we learn about the secondary ATS. So the private capital markets, I'll throw this in as well, it's only 10 years old. Sorry, 10. President Barack Obama signed it in at the Jobs Act in 2012. So I know the 506Bs were exist, but that's a totally different world. We're talking about selling to the general public. Here it is, 2012. It took another 2-3 years to get systems in place. And every year it gets chipped at where more and more money is being raised in using these regulations. But here's the one thing that it needs still in order to get there. It needs distribution. I know North Capital and us, we're always working, how do we get that better? So we need distribution. What we don't have in the public markets that they have are, independent reporting. We don't have that. Why is that? Because these are privately held companies. So there isn't that insight and if you do have that insight, well, now the company needs to be really concerned, and you should talk to your lawyer before you put these reports. So there are reasons why in the secondary, there's not a lot of information out there. And here is the major one. This is the one that, for me personally, it was I couldn't believe it. Privately held companies, every single year, we spent anywhere between $200 to $400 million a year in doing news releases. And what we all did not know is that none of our news releases were actually meeting the, being delivered to the media outlets. We were being given the link to the media outlets like Yahoo, that it's there, but it actually wasn't being distributed. So what does that mean? We're already at a disadvantage that even though we did everything to get it out, so if a secondary ATS is looking for your news releases in the public, it can't find anything. So how does the public know about your news releases, your updates and all that? So we still have some points to complete, but once we do, I think that will evolve. But these marketplaces, I think that's where it's at. So I took up a little bit of time. Kiran, I'd like to hear your comments before we sign off.
And before, I'm going to have to jump, Oscar. So
I know you got to go, buddy.
So it's a pleasure for your community, Oscar, for all of you guys. And just thank you so much for having me. And I'm sure we'll be following up and answering more questions. Okay. Thanks, guys. Yeah. Talk to y'all later.
So for me as a technologist, right, the really exciting part for me is that people come to me and give all these really interesting examples and say, can you do it? And hey, you're talking to a technologist. I can do anything you want. But the point is, sometimes I'm like, Sarah's comment was about Debbie Downer. I'm like, cautious Kiran saying, no, I can do anything you want, but is that the right thing to do, right? Is that compliance say you all? And so one of the big interesting challenges, by the way, it really makes my life very exciting and interesting, is how do you take all these new business models with tokenization and ensure that you keep the flavor of the innovation in the new business model, but also retain the safety, the security, and the compliance. I mean, that's been it's very exciting, by the way. So, what can I say? I'm all for it. Let's do it.
It is. And again, I want to thank both of you today. And obviously, Louis, we knew ahead of time that he needed to leave for another pressing meeting. As you can appreciate, when you are at the crossroads of this market, and he really has come in, I'm excited. It's been a while since Louis and I collaborated together. So for you, me, Sarah, and of course, Kiran, it's going to be an exciting year. Thank you, everyone, for coming in. Once again, we want to thank our speakers, Sara Judd from North Capital, Louis Cohen from DLX Law. You can find all their bios at KoreSummit.com or reach out to us at any time. Just email us. We'll get you the information. Till next time, thank you. Have a great week. Thank you. Take care.
Thank you.
Thank you.